If you're working from home, you're not alone. The latest stats tell us 6% of Canadians are doing that. And of course, if you have a business in your house, you probably have a home office, and there are certain tax advantages. Today's Your Money Month segment, Lorn Kutner, tax expert with Northwood Family Office, is going to break it down for us. So always great to have you here, Lorn.
Thanks, Ray. Good to be here.
So you've got the home office, and most people know, if I got an office at home, I can write things off. First of all, you know, some people don't understand what it means to write things off, and secondly, you better not go too far. So give us the ground.
Okay, so first of all, it has to qualify for the deduction. And so it has to be your principal place of business, or is the important thing, it's not an and, or it has to be used exclusively to meet clients, customers, or patients on a regular and continuous basis. So that's a mouthful. So if it's your only place that you work, it's relatively easy that it's going to qualify. But if you have other places in the city or wherever you're living that you can use for your business, and this is additional to that, you have to look at the word exclusive. In other words, the space that you have available can only be identified for your business. In other words, a corner in the basement isn't going to cut it. Or if you're in a exercise room and you're sharing it, you have a desk and you have an exercise room, maybe have other things in there, it's got to be set aside exclusively to meet. Meet generally means face-to-face. Although in this day and age, Skype and whatever will probably quantify. Customers, clients, patients on a regular and continuous basis. So that means if I was a doctor and I saw 2 patients a day, 3 days a week, that likely wouldn't qualify on a regular and continuous basis.
Really?
Yeah, so if you're in the first test and it's your principal place of business, you don't even have to worry about it. But if you're not in that test, then you really need to look and examine, are you going to be able to make those deductions?
Now, before we get to the deductions, because you've passed the test, I just wonder how often does the CRA actually check on people in terms of whether their home office passes? How often are you audited in that sense?
Yeah, I would say that if you're carrying on a business and you're a sole proprietor, you're deducting on your personal tax return, it could be one of your larger expenses, depending on what else you're doing. And they would look for markers. They would look for things that would say, this looks a little out of whack. In other words, one of the things you have to look at is what percentage of your square footage in your home are you actually using for business purposes. So if you have that room, and so what's the square footage of that room over the total square footage in your home, and that's the percentage that you would use against the eligible expenses. And if that percentage is on the high side, that may raise eyebrows at CRA, and they may question it.
Okay, so say you do pass the test, then we've been talking about these tax breaks. I don't have a business from my house, but I have a lot of expenses having a house.
Okay,
so which of those expenses can I start putting towards that home office?
Right, and really there's a lot. So if you rent, so it'd be rent. If you own, it'd be mortgage interest, not the principal, mortgage interest and property taxes, utilities, so heat, gas, etc., insurance, home insurance, repairs and maintenance. So again, you have to be careful about that, because if you have a broken sink in the kitchen and you repair it, you really can't deduct that based on your square footage. But if you have a cleaning lady, for example, yeah, so some percentage of that cleaning lady, because clearly that individual is cleaning your office as well as the rest of the house, would qualify. Or if you had to make a repair specifically in that room, then generally 100% of it would qualify. You wouldn't even have to prorate it based on your square footage. So the typical homeowner type expenses, not your internet unless you use internet in your business, or your home phone. Again, it really depends how much of it you're using it for your home business. You got to be very practical and reasonable, and that's the key thing. I mean, as tax practitioners always say, pigs get fat and hogs get slaughtered. Don't be a hog. You don't want to be over the top. You want to be reasonable and make your life easy in terms of if CRA comes to want to review it.
Now, being reasonable, sometimes people aren't reasonable, or sometimes they make an honest mistake. In all the years you've been doing this, Lorn, what are some of the crazier things that someone has said? Hey, I got a home office. Can I put that in there?
You mean like you're running off your dog?
Running off your dog?
Yeah, no, that doesn't
Executive
work.
Vice President of the operation?
I actually had a client that tried to make that argument that the dog put him in the appropriate headspace to work more productively. Nice try, but that doesn't work. I mean, generally they just try to be aggressive on the percentage. They try to say, well, I'm 50% of the house. Well, really? Like, what about the kitchen and the bathrooms and the living room and dining room? Like, you need to be reasonable, and that if you are reasonable, even if you make a mistake, CRA is understanding. But if you go over the top, they generally take a bad eye at that.
How far would they ever go back if they started getting curious about your home business? How
Well,
far
they could go back 3 years. They can go back 3 years. So any year that's not statute barred, they'd be able to go back to. Beyond that, they don't have any ability to go back unless they consider it as gross negligence, which typically wouldn't be the case. So, yeah, for those 15 years where you were excessive, you're free and clear. But again, you want to sleep at night. You want to be reasonable about the expenses.
Fascinating stuff. It's always great to have you, Lorn.
Thanks, Craig. Good to see you.
Lorn Kutner is tax expert with Northwood Family Offices.